Phil Evans with Bay Area Lifestyle, and today we have a very special guest for you guys. We have Phil Caulfield, who is a loan officer, and he's here to talk to you about mortgage and loans 101. Kind of let you know everything you need to know so that you can understand them better, understand better whether you can get one or not for yourself, and I'll let him take it away. Well, so some of the things that we want to talk about today are different terms that we hear a lot, but we don't really know what they mean. So I'm going to throw a couple at you and just kind of roll with it, okay?
Sure.
So the first one that we talk about is conventional versus unconventional loan. Is it unconventional or non-conventional?
Non-conventional.
Non-conventional. Okay,
Right.
so tell us a little bit about what each is real quick and what the difference is between the two.
Okay. Well, basically, there's three different types. First of all, you have conforming, which means that the loan is saleable to Freddie Mac or Fannie Mae.
Okay, so those are another two terms that we hear a lot of. Freddie Mac, Fannie Mae.
Right.
Those are what?
Freddie Mac and Fannie Mae are quasi-government companies that buy loans from lenders from all over the country. So it keeps the liquidity so that all the lenders have money to loan out.
Okay, all right, great. So with Freddie Mac, Fannie Mae, they do the conventional loans.
They do, well, yeah, conventional, or some people call it conventional, some call it conforming.
Okay.
The other type of, second type is FHA and VA loans. Those are government loans. Those are loans insured by the government.
Okay, and we'll talk a little bit more about FHA and VA a little later. So if you are a veteran or you just can't come up with a 20% down payment, those are going to be very important topics for us to discuss with you. Okay, so we have the conventional and we have the
Government.
And
then the last type is a jumbo loan.
Okay.
Where in most parts of the country, that's any loan for a single family above $417,000.
Okay, so jumbo loans pretty much across the board in the Bay Area is what people are getting. Is that accurate?
That's pretty accurate,
Okay.
yes.
All right, great. So another term that we want to talk about is pre-approval versus pre-qualified. Can you tell us what those terms mean and what the difference is?
Sure. Okay, a pre-qualification is when a borrower meets with a lender, supplies the necessary documentation, and the loan officer says, okay, it looks to me like you can qualify for this loan. So it hasn't gone the next step. Okay, the next step is pre-approval, where the loan officer either gets the loan underwritten automatically over the internet by Freddie Mac or Fannie Mae if it's a conforming loan or a government loan, or actually has an underwriter look at the file and approves it subject to the client finding a house.
So is it fair to say then pre-approval is the one that people want to get?
Yes,
Okay.
yeah. You want to get to the pre-approval so that you can make an offer that you know that you're going to be able to qualify for as long as the property and the title of the property is okay.
Right. So when you do pre-qualified, it's faster, it's easier, but that may not pay off well for you, especially in a competitive market like the Bay Area, because you want to be able to pull the trigger if you find something. And more importantly, you really want to know what you're really qualified to shop for. Is that accurate?
That is accurate,
Okay.
yeah.
All right, great. We have Phil Caulfield here, the loan officer extraordinaire. So give us a call. You'll find my information at the bottom. I'd be more than happy to help you find your next dream home, as well as send you over to Phil to get pre-approved. I think that's the one we want to go with. All right, thanks so much.
Thank you.